Okay, everyone. So it's January 14th, and I doing another video that's going to be stock related. And the reason I'm doing this video is because it is January, and this is going to be the best time of the year to actually start investing if you invest or are looking to get into investing. And I'm going to explain why throughout this video. So if you've followed me or my channel on YouTube before, you probably may have heard along the way somewhere along the way that I tend to be pretty active on a lot of forums. In the case of this video, it's a stock forum that I'm following, and the reason I like to follow forums, I act as either a contributor or like somewhat of a lurker to try to immerse myself in any given topic. When it comes to stocks, I am going on 42 years old, and I had my first foray into the stock world, I believe, when I was like a junior in high school, because my high school was pretty great at offering some pretty oddball classes, which I feel like might not be so common these days. Like my high school, they did offer an investing course, which I absolutely loved. It was like an elective. They had like C++, web page design. I mean, they had a lot of cool stuff, and I feel like schools these days just don't have the same opportunity. I don't know too much, but about the curriculum, kids have access to these days, but yeah, it definitely just seems like, anything financing related, kids just aren't getting as much opportunity to learn about this stuff. So really my first foray into stocks was through this stock course in high school, and I loved it. So I also took similar courses in college, and my father-in-law instilled a lot of information upon me over the years, and I got a lot of other information through just following online stock forums and classes and videos and that sort of stuff. So I'm on a stock forum, and within that stock forum, there is someone who I've been having quite a bit of back and forth with over the last couple of months. It's a girl named Julie, and from the best I can gather, it seems like she's like a mom, and super well aware of what the stock market can do for an individual. So it seems like she is well aware of the possibilities one can get through the stock market. However, it also seems to me that she's still struggling with how to actually gain those benefits. And a lot of that comes from the fact that very clearly she's a brand new investor and has been at it for less than a year. So while she's done a lot of reading and knows, a lot of the possibilities of stock trading and investing, she's still struggling with, actually turning a profit and having success doing so. And I can tell she is really reaching a point in her stock investing career where she's at a crossroads where she's at risk. She could go either way. She's going to either stick with it, or she might be so frustrated that she just gives it up entirely and walks away. I will say, and I was not aware how little experience she actually has. But she has made topics regarding certain companies in the news, like I'd say newer companies, and kind of pushing them. And I get the feeling the reason she does that is because she probably has purchased said company, and because she owns the stock, she wants it to go up, and because she wants it to go up, she wants to promote it, because she feels if she's promoting it, other people are going to buy it, and it's going to make the price go up. She's actually done that 3 or 4 times. And every single time, I've kind of knocked her down a little, because these companies she's posting have like a negative 500% profit margin. So, like negative 500. So just to give you an idea of what that actually means, is it means when a company has 100% negative 100% profit margin, that means dollar for dollar, every dollar you give them, they not only spend it, but they actually spend an additional dollar. So for every dollar you give them, they spend 2. So they're not just not making any money, they're actually burning money significantly. So what that really means is they have a long way to go. They might not survive. These are the companies that go bankrupt. They can only survive so long before they're able to actually start turning a profit. So Julie keeps posting these brand new companies, and they're like negative 500% profit. I'm like, ooh, that's bad. And I always point it out to her. And she doesn't really know what I'm talking about. Because she hasn't quite bridged the gap yet. When people get into stock trading, it's a very abstract thing to people. They see the ticker, so it could be NVIDIA, NVDA. A lot of people, they just see the symbol and the numbers, and they see the numbers going up and down, and they see the news reacting to it. A lot of people don't have the ability to understand that these stocks are more than just letters with like random assigned values. They are actually real live companies, like with real people, real employees, and they really make money or they really lose money. So like, just to give an example, NVIDIA has like over a 50% profit margin. So that basically means for every dollar you give them, they make like over 50 cents. So they give you back your dollar and they give you 50 cents on top of it. So that's what we want through a stock. Now the companies Julie is posting is you give them $1. They not only spend your dollar, but they spend 4 to 5 other dollars. Where are they going to get that? You? Who knows? They go into debt? Who knows? So Julie's really struggling with that. And so last night she makes a post, and basically she's really losing it. She's really, really, really losing it, ready to walk away. And I'm like, don't walk away. I'm like, it's a lot simpler than you think it is. It really is. I said, all you have to do with stocks is find a company, look at the past 5 years as an indicator of performance. Over 5 years, any reasonable stock should be approaching about 100% gain. Over 5 years. And when you look at the financial report, the profit should be positive. So the average profit margin is probably in the 8 to 10% range. It's usually about average. But like I said, in the case of some companies, such as NVIDIA, it's over 50% profit. That means this company is making money hand over fist, quarter after quarter after quarter. So, like, Julie was really, really, really concerned because it's January, and yesterday the market, the last few days it's been crashing day after day after day. The whole market's down 1%, 2%, 3%. And a couple of people, including myself, are like, no big deal. She's like, what do you mean no big deal? Like, I'm losing money left, hand over fist, hand over fist, hand over fist. It's like, not a big deal. And I basically say, it's not a big deal to me because my portfolio isn't like super huge. It's limited to like a handful of stocks, but on average, my portfolio reads for each individual position anywhere from an 80 to 100 to 1,000% gain, 80 to 1,000%. So if it goes down 2%, I don't care, because I'm accumulating gains over the years. And she goes, how can you do that? And the only thing is time. You're going to get 1,000% gain. There's only 2 ways. Number 1 is luck. And that is really that's what Julie is really hoping for. She's hoping for luck. That's when a stock is able to do 1,000% gain in like 6 months because of like weird emotional market type weirdness, or time. You can get 1,000% gain in 5 years, 10 years. Apple, 1,000% gain in 10 years. NVIDIA, well over 1,000% gain over 10 years. So you only have 2 options when it comes to stock. Either luck or time. And guess what? For anyone that actually knows me in person, I do not have very good luck. We can talk about it sometime if you really want, but luck is not really a thing with me. I have really, really, really bad luck. Whenever anything is about to happen that might be good, something twice as bad happens. Like, trust me on this. Really bad. Really bad stuff happens. Really, really, really bad stuff happens to me. So, like I said, we'll talk about it sometime. But, so the only thing that I have is time combined with consistency and financial fundamentals. So time means nothing if you are investing in a company that doesn't actually make money. Now you're just relying on luck. Like, for a stock to go up when it's actually losing money, that makes actually no sense at all. Makes no sense at all. So you're relying on luck because you're relying on something weird that has to happen to make a stock go up despite them losing money. But so the profit margin, when it's negative, the longer time runs, the more and more money it's running, so the stock's just going to keep going down and down and down and down. But when profit margin is positive, and you know that it's not just a fluke, this is why you have to check multiple quarters and multiple years when it comes to stocks. You have to make sure that quarter after quarter after quarter, you want to see 52% profit, 48% profit, 49% profit. You don't want to be like, oh, 50% profit this quarter, but they were at negative 263% the quarter before that. Well, what's going on? Did they just have like some sort of weird fluke? Like, did they liquidate some stuff? So you have to check the fundamentals. And again, we're talking about this because my real goal is to help people that might already invest in stocks make more sense of the market if they're a little confused. But it's also to get people, especially around me. I like people around me to benefit some way from my presence. If I can teach people around me something to make their life better, I'm going to do it. So so that's what we're talking about. The stocks are making money. So anyway, where was I? You got positive profit consistently. So as long as they're making money, the longer you wait, the more of that money is going to accumulate. So you're going to get your 100% gain after 5 years, 1,000% after 10 years, so on and so forth. So, furthermore, what I told Julie is that picking stocks is actually very, 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 very easy. Very easy. Because like 90% of the profits within the United States available stocks really is made by the top 10 companies. So you get the top 2,000 companies. If you throw a dart at a board at any random company on the top 2,000, believe it or not, 9 times out of 10, there's a good chance whatever company that dart landed on and you're stuck with it, you're actually going to make no money at all. You're not going to lose money, but you're going to be trading sideways. Because on average, within the top 2,000 companies, again, mostly in my opinion and recollection, but do your own research, for the most part, they break even. The top 2,000 companies don't necessarily actually pull a profit. Breaking even. By the time you get to the top 500, you're going to, on average, make about a 10% gain per year. That's the top 500. By the time you get to the top 10, you're probably going to average about 20% gain. So the great thing about that whole concept is that they already tell you what the good stocks are. And the top 10 companies have been and will be the top 10 for a very, very, very long time. Yes, they will compete with each other. But a company that's top 10 isn't going to drop to top 500. And even if it did, you're still going to be doing pretty good because you know the top 500 still gain 10% per year on average. So you're very, very, very safe, when you're investing in these companies. So she goes, oh my God, really? It's that simple? So top 10, she's like, just right off the top of my head, Apple, Nvidia, Tesla, Microsoft, yep, Google. There's 5 right there. There's 5 more. I'm not going to bring them up, but yeah. So it's that easy, Julie. That easy. If you look at the 5-year history of any of those companies, they're giving you pretty good returns. So all you have to do, Julie, is make a plan, stop investing in these little tiny no-name companies and stick to the big guys, create a solid foundation, and you have to buy these stocks consistently all the time. And now you just have to wait and resist the urge to sell. Like, people get so like, oh, I want to buy low and sell high, and then buy low and sell high. No, buy. Don't sell. Why are you selling? When you buy a stock, it takes 7 years for it to really reach a really good potential. If you sell it, you just reset the whole process. Now you go wait 7 years again. So stop selling. Buy a really strong company in the top 10, making sure it pulls a profit and has a good history going up, and hold on to it. Plan to hold on to it for like 7 years. I promise you, you will have gains in the 80 to 1,000% range. Unless something really bad happens to this world and whatever. But I can't promise anything, but you will very high probability of having 80 to 1,000% gains. It's really not as hard as it seems. It's very simple. And so we have this conversation, and funny enough, Julie makes a post today about some company benefiting from new policies being announced, and it is, to the best of my recollection, ticker symbol ending in like JOBY, Joby. I do not recall what they do. I'm actually not super familiar with them because they're not top 10. And I immediately go, Julie. I go to Google. I do a search on the company, find its financial report. She has a history of posting stocks with a negative 500% profit margin. This one really takes the cake. I need to get the exact figure for this one. So bear with me. I'm going to Google it. JOBY. They are an aviation company. They are currently running $7.86 per share. Year to date, they are down 4%, 4.38%. In the 5 past years, they're down negative 26.61%. And they're out of Santa Cruz, California. And they have a net profit margin. This might be the highest I've ever seen in my life. Negative 513,850%. Holy moly. And you know what? The quarter before that, negative 440,328%. Quarter before that, negative 378,348%. They are bleeding money, and it's consistent. It's consistent. They're not going to be around. And Julie thinks she's going to invest in them. And she's going to get mega rich. But this is run by a company that they can't even make any money. You cannot make money when a company isn't making money. And a lot of people don't realize why the top 10 companies are where they are. A lot of people don't get it. I'm going to give a little secret. Microsoft. What do we know Microsoft for? We know them for Xbox. Believe it or not, Xbox doesn't make that like 5% of Microsoft's business, and it's basically a donation to humanity. Makes no money. Makes no money. Windows. You think that is where Microsoft is making its money because everyone runs Windows? No. Windows is basically a donation to humanity. So what does Microsoft do? You know where Microsoft makes all their money? The same place Nvidia makes all their money, and all these big tech companies. They actually make the majority of their money through servers. And I'm not going to get into the business model too much, but we all know servers are required to run the internet. And they're required for things like cloud storage and, email. All this data that's in the cloud, it's stored somewhere. So the internet is ever expanding. If there ever came a time where you're trying to upload something online, like your, Facebook post, you need a server to store that data on. So that's actually where all these companies are actually making their money. It's through their server businesses, not through what they typically are known for. So Microsoft, they obviously producing Windows and giving access to the internet to your average everyday consumer is in the best interest of Microsoft. Consider Windows to be their business card or their postcard to actually utilize what's really making them the money. Because if people can't access the internet, what good are their servers? So that is why Microsoft is one of the top companies, as well as Nvidia. Nvidia's, they have a huge server business. Whatever these companies are really well known for doing, it's usually not really what's actually they're not becoming these trillion-dollar businesses off Windows. I mean, they probably operate Windows at a loss. Even if they sell it at $50 to $100 a whack, they're still losing money on it. But where they're gaining money is, like I said, Windows would be their business card or their postcard. Now you're accessing the internet, and for the internet to exist, you need this big network of servers that's ever expanding. So that's where the tech industry comes from. And that's all I got. That's all I got for today. We're running on close to 30 minutes here. And so I told Julie, negative 500 and whatever we just said percent. I'm like, that is crazy. And she says, where did you find that? And I had to kind of explain how. And she's like, oh, I see it now. So hopefully she does not walk away from stock investing. Because it can be very fruitful. And for anyone who hasn't watched any of my free stock investing lessons on YouTube or gotten any one-on-one advice from me, what can we expect from stocks? We can expect in about 5 to 7 years, for every $1,000 you put in, expect $2,000 in 5 to 7 years. And then 5 to 7 years more, expect 4,000, then 8,000, then 16,000, then 32, then 64, then 128, then 256, and so on and so forth, till the end of time. So as you can see, 5 to 7 year terms. You've got to have a lot of time on your hands to make it work. Or you could have a lot of starting funds on hand to make it work. Or you can get everything supplemented with occasional lucky spells. So maybe in 5 to 7 years, 1,000 didn't turn into 2,000. Maybe it turned into 4,000. So you got lucky. That's great. Really great. But it's probably only a one-time thing. So luck comes into play occasionally. Because for every instance of luck, you also have an instance of bad luck. So maybe 5 to 7 years passes and you don't hit 2,000 off 1,000. Maybe you only hit 1,200. Maybe you lost money and went down to 800. Maybe you were in a top 10 company. and maybe they had some really, really bad unexpected news, government intervention, war, plague, something crazy. So that's what we're after. $1,000, 2,000 after 5 to 7 years, $10,000, 20,000 after 5 to 7 years. But we work really, really, really hard. So this year we put in 1,000. But next year we made 2,000 off that, but we put in another 1,000. Start a new position. And then we start a new position the next year, the next year, the next year. So now you're creating like a snowflake. And things are just going crazy. And you increase your chance of hitting lucky streaks. So you want to create chaos. Like, get this like crazy snowball rolling, and it just like rolls out of control. And then you have like way too much money and too much stocks to even like know what's going on. So it's just like too much coming at you, and you just can't even keep track of it all. And the universe is just like throw money at you, and you're like, oh, what the heck's going on? That's what we're after. That's what we're after. But to get that snowball rolling, you have to be like consistent. You have to have a plan. You can't be like investing in negative 500,000 things. No, there's 10 top 10 companies. Focus on year one. Like, focus on like Microsoft year one. Get up to $1,000 on it. Year two, do Apple. Year three, do Tesla, Nvidia, Google, Meta. All these top 10 companies. Just do it all. I mean, I can pretty much tell you, you're not going to have these companies fall off the top 10 super, super fast. They may with time, over time, but I mean, it takes like 16 years on average. You know, that's about something I was reading. It said something like 16 years. You know, Apple has been top 10 for like 20 at this point. Do you think people are going to stop using iPhones? Even if they do, you know, it's going to drop to top 20 before it drops off the top 500. As long as it stays within the top 500, you're still going to get decent returns. And decent returns are considered 10% per year. So you got to keep an eye on these financial reports and make sure they're positive. And if you can't buy stocks, that's your first step. You got to get the ability to buy it. You can get stocks on Robinhood, is one of the top apps now that's free. Cash App allows the purchase of stocks. And E-Trade, you know, E-Trade's probably the more difficult of them, but, you know, probably one of the better platforms. And get your ability to buy stocks, and then just commit. You know, look at the top 10 and just start buying like weekly, monthly, yearly, whatever you can do. And, you know, just get that money. And what that's doing, I've said this before in past videos, that's giving you access to basically the economic and industrial production that this nation is producing, which at certain points in history have only been available to like kings, emperors, dictators, government. Not always have individuals such as ourselves had access to the economic output of a nation. And stocks give us access to that production. So again, when we do well as a nation, our output is higher, our profits are higher, stocks give us direct access to that benefit. They're the only thing that gives us direct access to that benefit, with no one in between. So with that being said, I drabbled on for another 5-6 minutes. I'm done. Follow me on my YouTube channel if you wish, Matt Hunts Boston. I'm talking about stocks now because it's January. I got a little more to talk about actually. Why is January such a good month? I'll tell you. last year's done with. We look at a year's worth of gains as a gauge for the value of a company. And when does that year start? Oh, right, January? Oh, you don't say. Guess what? 2024 is closed out. We know how much Nvidia made for the year at this point. We know how much Apple made, Meta, Microsoft, Google. We know it's closed. Done. December 31st, end of the year. They are done. We know how much they made that year. Now we're on essentially day one. It's January 14th, 14 days in, whatever. But it's essentially day one. They haven't made a dime for this year yet. So there's no economic output to benefit from. It's day one. We're zero. So January is the best month to get in, because do you think we're going to make it to the end of the year, December 2025, and Google's not going to make a single dime? No, they're going to make money hand over fist this summer once the country's in motion. They're collecting ad revenue from advertisers. Meta's going to be making money. Nvidia's going to be selling graphics cards. Apple's going to be selling iPhones. They haven't even started yet. It's 14 days in. So now is the time to start buying. It's the lowest the prices are going to be all year long. Now is when you want to get in. Because when Nvidia, when Apple gets their 20% gain for the year, Nvidia gets their, whatever it's going to be, I think. I'm curious how much Nvidia made last year. They did really well. I'll tell you exactly what they made. 1 year. 133%. That is nuts. Are they going to do that again this year? Probably not. There was a lot of excitement last year, a lot of catching up, but do not forget their profit margin is 55%. I think they'll at least make a 20% gain this year, so go ahead and buy some Nvidia. Nvidia, Apple, Meta, Google. I am not a financial advisor. I'm just telling you what I would do, and you make your decision. Knowing that if you buy Nvidia, if you put $1,000 into it, yes, you could lose it all. You could have zero by December 31st, 2025. But they make 55% profit. They have a huge server business. They make video cards, and a lot of PCs use them. And they are now making all sorts of this AI stuff, which is the third part of their business, which is why their business went up so much last year. So they do servers, graphic cards, and AI type products. And I should mention, they have a pretty good monopoly on the AI department, because a lot of the AI is relying on their hardware to function. Don't know too much about it other than that they have a pretty good monopoly on the situation. So January is a great time to buy, because all the money is going to be made from now through the end of the year. I will tell you, there is a lot of money made around April, May, June, July. It's a little lull September and October usually. November is usually a great month, money being made hand over fist. You got Christmas the very next month. December itself usually is pretty decent. And then it's all over. January, horrible. February, everyone's in their home hibernating because of the winter. March, hibernating. And we're back to April, May, June again. Okay, so January is a great time to start investing. It's the beginning of the year. It's the month you have to start investing to make the most gains on the amount of money that a company is going to make through the rest of the year. You have to get in January. A lot of people are like, oh, the market's down. Am I going to lose money? I don't know. Do you think you're going to lose money if they're making money? So if you own Google and they're making money through the summer, and somehow you're going to lose money? Makes no sense. Makes no sense. January, invest. Now we're up to 40 minutes. But, yeah, that's it. This is just to help people. This is all stuff I already know, but when I see people out there such as Julie ready to walk away from stock investing, I not only kind of give her a little nudge in the right direction, but I can also use her kind of as a canvas to possibly help other people that might be struggling as well or are not in stock investing, and this might be a good time to actually get into stocks. With that being said, we're at 41 minutes almost, and I am done. Good night. Follow me on my channel. This is an investment talk, but on my channel I also do like hunting trips, hunting education, photography type lessons. I really need to get on that. Just various stuff I like, aviation related stuff, flight simming stuff, anything I can do at night when I'm bored. So follow me, Matt Hunts Boston, on YouTube, or you might be seeing this because you know me personally. Good night, and see you next time.